This week, the market is marching higher, but not in perfect unison. Russell, Dow Jones, Nasdaq, and the S&P 500 all carry bullish mid and long-term prospects, while short-term volatility remains within normal bounds. Large caps continue to lean bullish, though some signals demand further attention. Today we'll explore the four indices, spotlight NIFTY and Google, and connect the dots with our broader strategy outlook. And today we start with the Russell Index. This is the closure on Friday. What we are seeing here is that potentially daily frame formed a bearish harami. However, without confirmation, it's still a big question. Now, we had a bearish harami here at the end of August, but it ended up being just a fake out, and Russell continued its move higher. So far, let's see what happens on Monday. The weekly frame formed a doji, which could be also bearish and bullish, but we are treating it at this point as neutral with the perspective of going higher. If we look at the bigger frames, like 15-day, for example, it closed 2 weeks ago with a very strong continuation candle. So far, the current candle is a mild bullish continuation, and there is no concerns at this moment. The only thing that we might see some volatility on the short term. And the one thing I'd like to highlight here is that most likely the first thing on Monday morning, Russell will form 100 over 200 days moving average bullish, or some call it golden cross. This is quite a rare event, and it will highlight long-term bullish perspective for the index. If you look at the Elliott Waves, this is the chart that we've been tracking since the beginning of June. So far, no changes to it, and it is moving higher. And I think that this would be just wave 3 of a much bigger formation. That's the perspective. And Russell added almost 14% since the call on June 9th, if you were with us. Speaking about long-term perspective, this is our marvelous chart that we are tracking since January 2020, and it had all major reversals here forecasted. This is the chart on January 5th, when we were saying that Russell is up to a big swing, and for this move toward this target and then moving higher. This is exactly what happened. So we had a sharp move down, and now Russell is recovering towards this target. That's our generic direction for the index, and let's see how fast it will make it to this target area. So that's the long-term and short-term perspective for Russell. And now let's switch to Dow Jones. The candles. So the daily candle on Friday was fairly similar to what we've seen just for Russell. And these indices, these two, are somewhat aligned with their development. So far, we are looking for confirmation here. An interesting closure on the 2-day frame, if we consider this as a big consolidation, which took 6 2-day candles, and now we have a rising 3 methods completed with a very good chance to continue higher. And the weekly frame, it's quite different from the Russell. So Russell was kind of neutral, but this one is bullish continuation one. At this point, I'm looking for a continued rally for Dow Jones. This is the long-term Elliott Wave. Again, this is the chart that I shared in December 2024. And this, if you notice, wave 4 down here and wave 5, red count. So this is exactly what happened. So this is wave 4, and now it is developing wave 5. I think that's in the middle of wave 3, which is I am not quite sure whether how fast it's gonna end, because it still has some room to move higher. But this is the chart practically remains unchanged. And now let's have a look at the shorter term chart. This is as we shared on June 15th. And since then, since June 15th here, Dow added almost 8% in just 3 months. I think it's perfect performance. Let's see how it goes higher. And just a quick look at the biggest contributors to the Dow Jones. Goldman Sachs looks very bullish. Microsoft formed an inside-up candle, which could be the end of the recent slump. And Microsoft, I think it is starting, at this point, it is starting a wave to the all-time high. Home Depot is bullish. Visa is bearish, unfortunately. It has a chance to move a little lower here. The same I can say about Sherwin-Williams. It's even stronger than Visa. While Visa could be ending the wave here, Sherwin-Williams, it looks like it is starting its reversal, and it's a weekly bearish engulfing. So definitely next week is going to be in red for the company, and how far would it go? That's still a question. Caterpillar, it looks like it is recovering from a pullback here and has all chances to move higher and print an all-time high. United Health, if you read our report about the perspective and long-term chart, so this is a very optimistic candle on the weekly chart. I think that the next one would be the monthly recovery. And unfortunately, McDonald's formed a tower top, and we have all chances to see McDonald's moving lower next week. That's all about Dow Jones. Now let's take a look at Nasdaq. What we are seeing here is an impressive closure on the daily frame and weekly frames on Friday. Bullish continuation candles, no concerns, technically sound. And also the 8-day frame, which is closing on Tuesday, has all chances to form a bullish continuation candle. Speaking about Nasdaq rally, we had two calls. First call was a bottom call here on April 22nd, a big one. This is the chart for those who don't believe. This was printed on April 22nd, and then the wave morphed into something bigger. So this was just the beginning. And on May 31st, we confirmed the rally with a statistical call. If you want to read it, it's still available on the website. And by the way, since April 22nd, those who followed us had made on Nasdaq only 31% plus. That's quite a rally, and it continues. Now let's have a look at S&P 500. S&P 500 closed the day on Friday with a candle which could be a topping one. However, without confirmation, it could be just a continuation candle. The 2-day frame formed a bullish continuation, and the weekly closed with a solid bullish candle. So the expectations for the next week is very optimistic. Now let's have a look at the chart. Again, we had the same call on April 22nd for S&P 500, and this is the chart that we last shared in July, saying that 6969 is our target, next target. So far it is a S&P 500 entered into the target area, continues its rally towards 3 or 5 wave, end of wave 3 or 5 in purple or in green. We still have questions for the technicals, which are not very clear from the supporting end. Now let's have a look at the shorter frame. This is the chart we discussed last week. No changes here. Everything is aligned, and I think it looks like S&P is getting closer to the end of wave 3 of 3. Well, now let's have a look at the large caps here. So we already discussed that Microsoft formed a very nice inside up bullish candle. Meta is neutral with this doji and is staying above all support lines. Amazon formed an incomplete dark cloud cover, still keeping the bullish odds, but barely. So I would say it's close to neutral. Apple, after a very concerning start of the week, it recovered actually, and this candle could be just a consolidation one before moving higher. Google is bullish, and Nvidia formed a very strong bullish engulfing candle, and most likely the rally will continue on. Tesla formed a bullish candle, however, it overstretched. I think that it's neutral bullish with slightly better chances to continue higher. And Berkshire Hathaway, it recovered from a huge drop, and technically these two candles are just a consolidation before moving higher. And the freshly made 8x20 EMA bullish cross on the weekly frame, I think it's a good signal for going long here. So these are the sectors, but we covered them. These are the daily ones, but we covered them on the weekly frame in our strategy digest, which we shared yesterday. So you're welcome to watch it and enjoy. So that's for the indices, for major US indices. As you can see, almost all of them are strong bullish going into the next week. Russell is somewhat neutral, but that's still a question of confirmation. Now let's have a look at two special features of today, and I'd like to start with NIFTY and its long-term forecast. So NIFTY closed the week with a reversal. It was a bullish harami, and now we have a confirmation on the weekly frame. Bullish is also looking good with the last 3 days moving above the 150 days moving average. So that's the perspective move. The 8-day frame, which is closing on Monday, had a good chance to reinforce bullish odds. And if the momentum holds for the next 2 weeks, the monthly could be a bullish engulfing candle, which would strengthen the bullish momentum on the large term. And speaking about Elliott Wave, this is the chart that we shared at the beginning of June, saying that NIFTY is rallying toward these targets. So these targets remain unchanged, and I placed some numbers here so that we can see it better. So I think that NIFTY formed wave 1 and 2 and now is about to start wave 3. I will share a short-term perspective with possible timing for the next wave, and I'm planning to do it today or tomorrow on the website. So far, the long-term perspective remains unchanged for NIFTY. Well, and the final discussion today is Google. this is our chart that we shared at the end of July when Google was 190. And I said that it had a very good chance to rally high. And at this point, it already ended here. And I think this is either already done or very close to forming wave 3. And by the way, since the call on July 21st, Google added 26%, which is an amazing rally. So in less than 2 months, 26%. For those who listened, they should be quite happy. Now let's try to form a channel here. So this is the perspective channel, and this would be quite a sharp wave, I would say. So this is wave 2, maybe wave 4 here, a sharp one, and wave 5, I would be looking for this one somewhere here. And so this is 2-day frame, so this is October, November. So perhaps by the end of the year, Google will add another 14-15%. But let's have a look at the candle. So this is, and by the way, today is not in August 10th, it's September 14th. Well, that's the perspective for the next move. And once we have wave 3, we would be able to form a bigger channel. Now let's have a look at the candles. Obviously, this is a huge overbought here, 84, 85 RSI on the daily frame. I think that it's time to do some correction. However, 100 over 200 days moving average bullish cross is quite a significant event. Speaking about the weekly looks a little stretched too, a little overbought, and maybe some correction towards the support line is due. And the 10-day frame is also a bit overstretched. So let's see how Google closes the month. So far it looks bullish. However, a pullback would be quite normal here. And once this pullback is over, this would be my perspective target towards 260, 280 by the end of the year. Well, that's the perspective for Google. And now let's talk about our swing room, which stayed long on SPY as of September 10th. Over the trailing 12 months, S&P 500 delivered about 17% only, while our swing room unleveraged returned over 41. A remarkable gap driven by discipline and precision. And now the wrap. The story of this week's market is one of steady bullish undercurrents. Indices. All 4 US majors, Russell, Dow Jones, Nasdaq, and S&P 500 signal continuation of a long-term rally, with only routine short-term swings. Special features. NIFTY maintains a healthy bullish trajectory on the long-term horizon. And while Google signals potential short-term pullback risk, but retains an optimistic long-term stance. Connections. These align with what we highlighted in the Strategy Weekly Digest. Volatility in check, the dollar working through its bottoming process, bonds awaiting September's Fed decision, and global trade momentum alive through the Baltic Dry Index. For a deeper grasp of markets, don't miss the written reports at the investingangles.com. They carry high-quality charts and more detailed analytics on indices, large caps, and global markets. Engage with the charts, share this digest with your trading circle, and subscribe for updates. New members can still try a 7-day free trial for access to all written reports and Tier 2 daily trade signals. At Investing Angles, we chart the charts before the crowd even blinks. Thank you for watching.